Dividend increases play a major role in kickstarting the snowball effect, so in this video, we're going to be looking at 7 dividend growth stocks that recently increased the amount they pay out in dividends, 4 of which I actually own in my personal portfolio. To analyze these stocks, we'll be using Seeking Alpha and my stock valuation spreadsheets. You can find a link to both of these in the description below. The first stock we're looking at today is Broadcom, stock ticker AVGO, and they just saw a dividend increase of around 14.1%, increasing it from $4.60 per share all the way up to $5.25 per share. If we jump over here to Seeking Alpha, we can see they're currently trading at about $1,075 per share. In the past year has been phenomenal for the company. They're up around 86.47%. Now here's what's really interesting about this company. If we come over here, we can see currently the starting dividend yield sitting at 1.95%. But if we jump over to my do-it-yourself investor toolkit, go to my dividend dashboard, here we can see my dividend yield on cost chart. If I blow this up, come over here, we can see my yield on cost for Broadcom is sitting at 4.04%. Now there's 2 different reasons for this. One, I was able to buy in at a great value with AVGO, and in fact, if we jump back over to my investment dashboard, you can see this is a position I've seen massive gains on. I'm up around 111%. But the other reason my yield on cost for this position is so high is because they also rapidly increase the amount they pay out in dividends. If we jump back over to Seeking Alpha, let's go ahead and look at their dividend history. If I scroll down, you can see over the past 10 years, rapid dividend growth going from 27 cents per share, now all the way up to $5.25 per share. So if we jump over to the dividend growth tab, scroll down, you can see the 3-year dividend growth rate sitting at 12.58, the 5-year sitting at 19.25, and the 10-year dividend growth rate absolutely unbelievable at 36%. This is one of my favorite dividend growth stocks for that reason alone. They've seen massive share price appreciation and dividend growth over the past decade, and it's performed very well in my personal dividend portfolio. Now let's go ahead and jump over to my valuation spreadsheet. Again, you can download this or any of my other spreadsheets on Patreon. But if we come up here and plug in AVGO and hit enter, you can see all of this data will automatically load in. Payout ratio currently sitting at around 55.79%. So overall, pretty healthy range for them. But let's go ahead and jump over to our dividend discount model, which is the valuation model we'll be focusing on today. You can see I plugged in the quarterly dividend payouts for this company over the past few years, so we can see those yearly dividend payouts and the year-over-year dividend growth rates of 10.7, 13.9, 12.2, and 14.1. That's an average growth rate of around 12.75%. Moving forward, I'm projecting a dividend growth rate of around 7%, discount rate of 9%, and that gives us a dividend discount model price per share of $1,123, pretty close to that current trading price, so it looks like it is close to fair value. The next company we're going to look at also recently saw a massive dividend increase, and that is Mastercard. If we scroll down, we can see they hiked their dividend by 15.8%, while also announcing a massive $11 billion stock buyback. If we jump over to Seeking Alpha, we can see year to date, the company's down slightly, about 1.34%. Keep in mind, we've only had a few trading days in 2024, but come over here, we can see the starting dividend yield sitting nice and low at 0.63%. But here's what's interesting about the company. We jump over to the dividend growth tab, we can see they have also seen massive dividend growth over the past decade, with a 3-year dividend growth rate at 13%, 5-year at 17%, and the 10-year at 23.38%. So when we look at the dividend history for this company visualized again, it's similar to Broadcom, massive dividend growth going from 11 cents per share all the way up to 66 cents per share. It's basically 6x over a 10-year time period. But here's what I really love about this company more than anything, the dividend safety. If we come down here and look at the cash flow payout ratio, we need to keep in mind dividends are paid out of free cash flow, and there's 5 different things a company can do with free cash flow. They can reinvest back into the business, they can buy back shares, attempt mergers and acquisitions, pay down debt, but they can also pay out dividends. So the cash flow payout ratio tells us how much of their free cash flow is being used to pay out dividends, and for the trailing 12 months for Mastercard, only 20% of their free cash flow was used to pay out dividends, and forward looking, it's only around 19%. That leaves massive amount of free cash flow left over to do things like reinvest back into the business so that Mastercard can grow and in turn continue to hike those dividend payments over time. That's a winning formula for dividend growth stocks. So if we jump over to my stock valuation spreadsheet, let's go ahead and come up here and plug in MA for Mastercard and hit enter. We'll go ahead and jump over to our dividend discount model. I'll zoom in, and if we see right here, we plug in again our quarterly dividend payouts so we can see the yearly dividend payouts, and our year-over-year dividend growth rates again looking very good with 10, 11.3, 16.3, and 15.8% dividend growth. Moving forward, I'm projecting a dividend growth rate of 8%, which is pretty high for this company long term, but when you look at it, I really think it's sustainable. So with a discount rate of 8.5%, we come to a dividend discount model price per share of $570.24, quite a bit above the current trading price. Now keep in mind, there are other valuations you should take into account. Now let's look at one of the higher yielding dividend stocks that just announced a dividend increase, and that is Enterprise Products Partners, and they just announced a 3% dividend hike. If we jump over to Seeking Alpha, we can see they already have a starting dividend yield sitting at 7.69%. Over the past year, they're up around 5.59%, and year to date, up around 1.46%. Now, if we look at the dividend history for this company, it's actually pretty impressive for a company with a high starting dividend yield. They've seen 25 consecutive years of dividend increases, and they went from around 35 cents per share in 2014 up to around 52 cents per share. So a long history of dividend growth, but the dividend growth rates have not been that high, as we'll see. If we jump over to the dividend growth tab, we can see 3-year dividend growth of 3.61%, 5-year of 2.92%, and the 10-year dividend growth rate sitting at 3.9%. Now, something that is very important to keep in mind when you look at these dividend growth rates is if they're not higher than the rate of inflation, then that company is technically paying out less in dividends every single year. So you do want to see a dividend growth rate at least above the rate of inflation. Now, if we jump over to the dividend safety tab, we can see EPD pays out a lot of their free cash flow in the form of dividends. For example, we can see their cash flow payout ratio sitting at about 59.25%, forward looking in trailing 12 months around 59%. And when we look at it in the form of earnings, for example, dividend payout ratio for trailing 12 months, sitting at about 80%. So again, this company uses a lot of capital to pay out dividends, and usually the result of that is you don't see as much capital appreciation. So again, if you are interested in EPD, just keep that in mind. You'll get most of your returns in the form of dividends. Now let's go ahead and jump over to my valuation spreadsheet. We'll plug in EPD and hit enter, and we can see analysts currently have a target price of around $31.79. If we jump over to the dividend discount model, we'll go ahead and zoom in, and again, we can see our year-over-year dividend growth rates, average growth of about 3.74%. Moving forward, I'm projecting a dividend growth rate somewhat low at around 2%, and again, that's because of that climbing payout ratio. But with a discount rate of around 8.5%, we still come to a dividend discount model price per share of $32.33. The fourth company we're going to look at is Waste Management, and they just recently announced a 7.1% dividend hike, along with a $1.5 billion stock buyback in 2024. If we jump over to Seeking Alpha, we can see this is another one of those low-yielding stocks, starting with a yield of around 1.57%. If we jump over to the dividend history tab for this company, we can see over the past 10 years, pretty decent dividend growth, going from around 38 cents per share up to around 70 cents per share. So if we jump over to the dividend growth tab, scroll down, we can see a 3-year dividend growth rate, pretty solid at around 8.7%, the 5-year a little lower at around 3.37%, and the 10-year dividend growth rate sitting at 6.73%. If we look at the dividend safety tab, we'll scroll down, we can see very healthy cash flow payout ratios, sitting at 26% for the trailing 12 months, and forward looking, sitting at around 25%. That's a range I really like to see it in. Now, the thing that I like about Waste Management so much is that the free cash flow growth is very predictable and steady for this company. So while you won't see super high growth rates from this company, investors are willing to pay a slight premium due to the reliability of their cash flows. And because of that, it is also a company that I own in my personal dividend portfolio. Jump back over to my investment dashboard and blow up my growth chart. You can see Waste Management is currently a company I'm up around 17.74% on. If we jump over to my valuation spreadsheet, we'll go ahead and plug in WM and hit enter, and the data will load in. Analysts currently have a target price of around $182.58 per share. Let's go ahead and jump over to our dividend discount model, and again, you can see in this scenario, we've seen pretty decent dividend growth over the past few years. Moving forward, I'm projecting a dividend growth rate of around 7%, discount rate of 8.5%, and that gives us a dividend discount model price per share of $199.73. The next company we're going to be looking at is one of the most popular monthly paying dividend stocks, and that is Realty Income, and they just announced a dividend increase of around 0.2%. And off first glance, that obviously doesn't seem like a lot, but you have to keep in mind this is a company that increases dividends basically every single quarter. So if we jump over to my dividend discount model, we can see currently they have a year-over-year dividend increase of around 3.22%. So that's quite a bit better than just the 0.2% we just saw. If we jump over to Seeking Alpha, we can see they have a starting dividend yield sitting at 5.17%. So a very nice starting dividend yield and a really good dividend history with around 26 years of of dividend increases, going from around 18 cents per share 10 years ago all the way up to now sitting at 26 cents per share every single month. If we go over to the dividend growth rates, we can see the 3-year dividend growth rate sitting at 4%, 5-year at 3.66%, and the 10-year sitting at 3.79%. That's honestly pretty solid dividend growth rates for a high-yielding REIT. If we jump over to dividend safety and scroll down, we're looking at a real estate investment trust. So in this scenario, we actually don't want to look at our typical payout ratio or even the free cash flow payout ratio. What we want to scroll down and do is look at the AFFO payout ratio. This stands for adjusted funds from operation. This gives us the best idea of how sustainable these dividend payments are. And the AFFO payout ratio forward looking sitting at about 76% and trailing 12 months also at around 76%. So overall, that's a pretty decent AFFO payout ratio for a real estate investment trust. If we jump over to our valuation spreadsheet, we'll take a look at our dividend discount model. We can see moving forward, I'm projecting a dividend growth rate of 3.25%. So with a discount rate of 8%, we come to a dividend discount model price per share of $66.91. The sixth company that recently increased dividends was Pfizer, and they increased their quarterly dividend by around 2.4%, pushing it to 42 cents per share. So overall, this is a pretty low dividend increase. Now, if we jump over to Seeking Alpha, we can see they do currently have a nice starting dividend yield, sitting at about 5.68%. But do keep in mind, that dividend yield has been climbing because over the past year, this company has been hammered. It's down around 39%, currently trading at around $29.56 per share, down from its 52-week high of $48.47. We jump over to the dividend history tab. They have a decent history of dividend increases, going from around 25 cents per share all the way up to now 42 cents per share. If we look at the dividend growth rates for this company, we can see it's been decent over a 3, 5, and 10-year time period, all pretty close to around 5%, but I do have concerns that dividend growth rate will be slowing in the future for this company. If we look at the dividend safety, I'll scroll down, we can see the cash flow payout ratio forward looking, sitting at 77.5%. So a large portion of the company's free cash flow is having to be used to pay out dividends, not really a good sign if you're looking for dividend growth. If we jump over to our valuation spreadsheet, I'll go ahead and come up here and plug in PFE and hit enter. The data will load in and we can see analysts currently have a target price of around $31.26. Jump over to our dividend discount model. I'll go ahead and zoom in, and again, you can see how these dividend growth rates have been slowing over the past few years. Moving forward, if I project a dividend growth rate of 2.75%, discount rate of 8.5%, we come to a dividend discount model price per share of $30.02, right at that current trading price. The last company we'll look at today is one that saw a very nice dividend increase recently, and that is Deere & Company. They saw a 9% dividend increase, going from $1.35 per share to $1.47 per share. Jump over to Seeking Alpha, we can see really nice 5-year return of 150%, and over the past year, down around 8.10%. The starting dividend yield currently sitting at about 1.48%. Let's go ahead and dig deeper into those dividend metrics, no pun intended. Look at the dividend history and look at the 10-year dividend history. We can see they went from 51 cents per share all the way up to around $1.47 per share. Now, if we zoom in a little bit closer, something you'll actually notice about this company is they hike dividends pretty frequently over the past year. They went $1.20, $1.25, $1.25, $1.35, $1.47 per share. So typically most companies will only increase dividends once per year, but this company has seen multiple dividend increases within just the past year. That's a pretty good sign overall. If we look at the dividend growth rates, we can see the 3-year dividend growth rate extremely high at 20.51%, the 5-year at 14.19%, and the 10-year dividend growth rate sitting at about 10%. If we look at the dividend safety for this company, I think you're going to really like what you see. Look at that cash flow payout ratio for the trailing 12 months. Only sitting at 9.32% and forward looking sitting at about 13.58%. That's an extremely healthy cash flow payout ratio. It will allow them to see very high dividend growth rates in the future. If we jump over to my valuation spreadsheet, we'll go ahead and come up here and plug in DE and hit enter. If we come down here, we can see analysts have a target price of around $428.30. Jump over to our dividend discount model. I'll go ahead and zoom in. We can see really nice history of dividend increases over the past few years. Moving forward, I'm projecting a dividend growth rate of around 7.5%, discount rate of 9%, and that gives us a dividend discount model price per share of $421.40, a little bit above that current trading price. So there you go. Those are 7 companies that recently increased their dividend payouts. Go ahead and let me know if you think there are any other companies that recently had noteworthy dividend payouts. But with all of that being said, if you'd like to download any of my spreadsheets, then you can head over to my Patreon page at the link in the description. Thank you guys so much for watching, and please don't forget to like and subscribe to the channel.